So Lindsay, Westpac today received a first strike against its remuneration report, challenging year for the industry. What do you think was the biggest issue shareholders had, and how are you going to go about consulting them in the next 12 months?
It's disappointing, obviously as a director and as a chairman, when you put resolutions to shareholders, they're a considered decision and you'd like to think there's going to be overwhelming support. There wasn't this year. It's a whole mixture, Michael, of issues for shareholders, but overwhelmingly the most important point was that most large institutional investors who voted against thought that we hadn't been strong enough, tough enough on short-term variable pay for the CEO and for executives. So whilst we worked through all of the issues in terms of risk and regulation and reputation issues, customer outcomes, and we brought down the executive pay and short-term variable pay, many people said not enough. And they're coming at it from different angles. Some are saying financial performance hasn't been strong enough. Some are saying you haven't met community expectations. Some are saying, look what happened to the Royal Commission. And some of that's reasonable, but some of it's not, because they're not finessing our Royal Commission about what for Westpac, or community expectations about what for Westpac. So it's been a mixture, but it's been a real eye-opener for me and for the board. Clearly, we'll continue to engage with shareholders. I'll spend a fair bit of time. I do that anyway with investors during the course of the year. I'll do that next year, and hopefully we can make the changes they want. But more particularly, hopefully we can get the performance up, less noise around Royal Commission next year, which means they feel happier about the performance of the company.
And here we are in Perth. Aside from remuneration, what are the key other things shareholders are asking you about? Is it dividends? Is it strategy? Is it wealth management?
Obviously this year was also dominated by Royal Commission, so they're interested in what we're doing there. That's why I spent a lot of time obviously in my shareholder letter, and then again today in my speech in relation to Royal Commission. But they're interested in a whole lot of things. They're interested in BT Wealth, where we're going with BT Wealth in a strategic sense. They're interested in franking credits, so the changes that might come through from a Labor government, how do we think about that in terms of capital allocation and returning dividends to them? Some good questions around technology and cyber, and how do we think about that in terms of protecting the bank. So you get a whole range, and then of course you get the not-for-profit questions. So today, as you know, Michael, we had at least 6 or 7 questions on climate change. Why do we lend to coal companies? What's our philosophy? What's our policy? That tends to dominate a lot of AGMs this year.
And more broadly, heading into 2019, how's the board thinking about the external environment? It's obviously intense scrutiny on pretty much all big business and regardless of industry at the moment. And there's also discussion around board obligations, governance, culture and the like. So how are you sort of planning to navigate this?
The important thing for me is I don't think there's been anything shown up in Royal Commission or otherwise which says structurally governance of large companies is wrong, right? So I think the idea of the role of the non-executive director, the role of the chief executive, that's still as clear to me today as it was 12 months ago. Perhaps not to others, but I think we need to be very firm in terms of saying that's not the cause of issues here. The cause is people making either genuine mistakes in terms of their dealings with customers and elsewise, or obviously some poor behaviour in some cases. We as a bank, I think, Michael, it is relatively simple, hard to implement, but simple to answer theoretically, and that is we've just got to get better at execution, right? So that's why, as you know, I'm a huge fan of the get it right, put it right mantra that Brian's introduced to the bank this year. Let's get really, really good at execution. We're very good at execution generally, but let's get better at that, and then let's be sure that if we do make a mistake, let's call it out, let's be encouraged to call it out, put our hand up and remediate quickly and fairly. So I think that's how the trust barometer will go back up again. If more and more people are saying, gee, I had a bad experience with Westpac, but golly, I raised it with them and within 2 days that was fixed and so on, that's what they'll remember. They'll remember the fixing, they won't remember the mistake. At the moment, the trust barometer's gone so far down because we, I think less than some other banks, but we have let people down and we haven't dealt with it promptly enough. That's the big message.
Thanks for joining us.
Good on you, Michael. Thank you.
So Brian, it's hard to believe we're at the end of another year.
It's not been another year, it's been quite a year.
Of course, yes. But heading into next year, we saw that weaker than expected GDP read last week, particularly around consumer spending. So I'm just wondering if you're worried at all around a slowing in momentum in the economy heading into next year.
Well, we have had the view that the economy growth rate was going to slow. I think it's important to remember it's still growing. It's still growing at 2.8% or thereabouts, not too far off 3. So I think the economy is still fundamentally healthy, but I don't think there's any surprise really that concerns about housing, the press around that, concerns about potential changes in government policy. We have a federal election coming up. There's obviously a lot of noise in the global environment. I think all those things are weighing a bit on business confidence, and that flows through into what people are willing to spend.
And property obviously key to the outlook to the economy at the moment. It seems like the RBA might be getting a little bit concerned about the risk of credit or lending being pulled back a bit too far. How's Westpac approaching this issue of credit availability at the moment?
Yeah, so I think it's important to remind people we want to lend. That's how we make money, and we don't have any constraints fundamentally on our ability to lend. We did tighten credit policy about 3 years ago around serviceability, built some new buffers into our calculations for interest rate rises and the like. But actually, the only changes that we've made in this past year have been about verification of it, particularly around expenses. So the documentation, and that's driven by regulators wanting to just be extra confident that the lending that's being done is responsible, that people can afford the loans that they're taking. So they've dialed up their expectations on us about proving up income and expenses. That feels like a harder process to some people, and I think that people are perhaps confusing that with a desire to slow down lending, and I think it's important to say that that's not what we're doing. I think there has been an effect, though, the combination of house prices coming off, asking for more documentation, questions raised by the Royal Commission about the role of mortgage brokers and the like, has probably created a perception of a tightening of credit. And I think there has been an unintended consequence on small businesses who are being subjected to the same documentation requirements. And for a self-employed person, it can be a bit more challenging to come up with a document. So I think there is a bit of an issue that the regulators are looking at on small business. But again, it's not that we've tightened credit, it's that the documentation requirements have gotten a bit stiffer.
Yeah, for sure. And heading into next year, we do have a couple of big things, such as the final report for the Royal Commission by February, and then, like you said, we've got a federal election a couple of months after. But apart from that, do you think there might be a bit more clear air to focus and really get the underlying business going?
Well, certainty is just as important for us in running our business as it is for our customers in making their investments. I think getting clarity as to what the Royal Commission is going to recommend and dealing with whatever consequences flow from that, resolving for us some of the legal cases that are outstanding with ASIC, just, it'll be good to have that behind us. And then once we get through a federal election cycle, we'll have a bit more clarity, hopefully, on the direction of government policy. But I do see, the premise of your question I think is right, which is we've had a lot of uncertainty this year, and certainly our number one objective at Westpac for next year is to reduce that uncertainty, close issues off, and get refocused on the impacts that are the changes in service that we're delivering, the impacts of technology, making sure we continue to support customers.
Great, thanks for joining us, Brian.
Great to see you. Thanks so much.